Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. mid-session brief. Today, we're going to talk about a little bit about NFP. We're also going to get you locked and loaded and previewed to trade CPI Live tomorrow. We will be back for CPI Live. I'm really looking forward to it. We're going to break down what's going on in the Forex because it's an absolute mess out there. And then also, we're going to look at a little bit of these equities. You know, we talked about 50,000. I wish I could sit here and pat myself on the back for nailing the call. We knew 50,000 was not over for the U.S. 30, but man, it got sloppy and it got ugly. I'm going to break that down, that trade idea that honestly got stopped out before the getting gets good, and that's a real challenge. But I'm going to go ahead and go through that as well. Been a decent day trading. I've got a lot of messages today. A couple of things. Number one, if your time zones are a little bit different, I've got some complaints about, oh, hey, you're supposed to stream now, or I wasn't expecting you, or we had a meeting now. And I go, no, you got to make sure that your time zones are dialed in. So I base everything on my mountain time zone, and that's about +7 GMT. So if our live streams are at pretty much 11 o'clock mountain time every day, that's going to be what, 1600 GMT, somewhere in there. So I'll always be thinking along the lines of, okay, if I'm late or if I'm missing a meeting, is it necessarily this guy's fault? Typically not. I don't miss many of them. So always check your time zones before we start having a back and forth. And it's no big deal. We just got to be a little bit better coordinating that. We also had a misprint yesterday. I put out the wrong levels in the US dollar Canadian dollar trade. I'm going to break that down too. I just misread the charts. A lot of that comes from fatigue. A lot of it comes from just not paying enough attention. And I forgot, instead of 34, I put 24 on the US dollar Canadian dollar. So we're going to want to do that as well. I'm actually going to start there. And then I'm going to point out something that's very, very important if you're trading currencies. And always remember, always remember your NFP ranges, your CPI ranges. It's something I talk about when we're covering them live, but I probably don't cover them enough in the following days and following sessions. So I got a full house here, lots of folks in the room. Good to see everybody. I heard some great stories from traders out there, and I'm very, very happy for all the success. I've heard a lot of folks are doing well. If you're not doing well, don't worry. It's not a contest. We're just in this to make a little bit of money and move on. And if you're not making money, ask questions, learn as much as you can. All right, everybody, let's go ahead and do it. Let me see. Ahmed, good to see you, Ahmed. Welcome. Bob. Hello, Shane. I hope you're keeping warm. Yeah, I'm doing all right. Smart Money did that thing again. I wish I had a crystal ball. Yeah, today's been ugly, hasn't it? Let's see. It's been challenging. Juan Restrepo, good to see you, Juan. Hello. Hey, yes, sir. And Tina Shing, always good to see you, Tina. 6 p.m. UK time. Yeah, it's about 7 hours difference. 7 hours UK time. I don't know. I got some static earlier today. Somebody was missing the thing. I go, what are you talking about? I mean, just tune in. Everything should be adjusting for you, but I don't know. All right, we just got a nice signal here on our 9 EMA strategy. We've really been going with this one a lot lately. This is interesting, the EMA RSI buy, and we're looking at that gold 1 minute chart, and there it is. Let's go ahead and take a shot at it. Let's go ahead and buy this thing. Had some pretty good moves right there. You can see the market got really choppy, and then you lost beautiful right there, though, stopping yourself out before the plunge, and then right there catching that rebound's not too bad. So we went ahead, we placed the buy. Let's go ahead and blow this up a little bit so you can see it. You can see the market's extremely tight. Absolutely extremely tight. Let's go ahead and just build this trade. How would we build it? Little drag and drop functionality. Put that stop loss right beneath that 1 minute bar. Put this profit target right up there. As you can see, we're sort of fighting a little bit. Very, very tight market here in gold, though. We're fighting a little bit of a downtrend, I would say. But, I'm not too worried about it. If we get stopped out here, that's okay. There's nothing wrong with getting stopped out as long as we don't take too big of a loss. Bitcoin, we're getting the same type of a thing. Let's go ahead and bid Bitcoin here. Let's go ahead and back this down. We're going to back that right beneath our swing low there, and then we're going to be relatively conservative with our profit target. Maybe put it right up there where this order block is. So something to think about there. Our gold trade looks like we're going to get stopped out, but that's okay. That's the way that this typically works. This Bitcoin, we'll see exactly what happens here probably in a few minutes. But the gold's definitely going to get whacked, it looks like. Very, very close to getting whacked. Let's see. Let's get back over there. Watch us get stopped out. Very close, trending down. I don't mind necessarily if we get knocked out quickly. As a matter of fact, I prefer that. What I don't like is these things holding on forever and tying up our capital and then knocking us out. So right there, we're pretty much on life support. We're getting ready to get stopped out of this trade. Pretty good idea to leave the market if this thing doesn't work, though, at least on a 1 minute. We're fighting. We know our stop loss is in a pretty good location. We're still alive. We're fighting. Is it going to work, though? Probably not. It looks to me like it's dead, but who knows? Maybe we reverse and actually take care of a little bit of business. Okay, now we're going green, bouncing up just a little bit. Remember, guys, 1 minute, probably not your best time frame. I love 5 minutes. 15 minutes is pretty good. 30 minutes is good. You can see we just got bounced off our stop. So that our stop loss is in the right location. And typically what I always say is you don't ever put your stop loss right beneath these signal bars. You back it off a little bit. And as you can see, is that luck? I don't think it's luck. I think we've got a pretty good feel about how far to put our stop loss down. And right there, we sort of fought back. We're fighting. We want to win. We're trying to get this going. Is it going to break our way in the 5th minute, 4th minute? Doesn't look like it. Looks like we're going to get whacked out. So definitely something to think about. If you're trading this 9 EMA, I got a lot of questions on it lately since we've released it. You can see a nice big move there in Bitcoin, though. So maybe we'll get Bitcoin. Who knows? We'll see exactly how these work. All right, everybody. I do want to get started, though, by showing you the 9 EMA. This is our strategy pack, 9 EMA strategy pack. We've got a nice how-to video there. I show you exactly what you need to do and how you need to break this thing down and add it to your charts. So you definitely want to check that out if you're interested in the 9 EMA strategy. All you do is you drop your email address right in there. You go to Unlock Strategy Pack, and that's going to send you you're going to get your PDFs. It's going to open a zip file. You're going to have your PDFs. You're going to have an EA. You just add the EA to the chart like I trade right in front of you each and every day, and you get an opportunity to get in on that strategy. If you're looking for a strategy, it's a pretty good place to begin. Now, remember, there's no guarantees of success with this thing. There isn't. There's no guarantees of success with any strategy. But this is one that I've looked at for a long time. We've got a lot of great feedback on it, and if you trade it within the right context, with the right leverage, you have a chance. So we've got a video in there that shows you exactly how to add it. We've got a strategy video that breaks down what the strategy is. We've got PDFs to guide you, and then also that expert EA that I built that can get you up and running with sort of the automated feel there. Okay, we got stopped out on gold. That's not unexpected. That was a tough trade. 1 minute charts. I don't know. I'd probably start with a 5 minute, but you can go 1 minute if you'd like. Let's see. Juan, bad day for looking for a reversal. There's no reversal just yet. I'll show you a few of the charts that I'm looking at. T. Marina, good to see you, T. Welcome. Let me see. Ralph H. Good to see you, Ralph H. Bobby Bob, Lita, Andrea Garwal. Good to see everyone. Gordon Williams, always a pleasure, guys. Okay, there's a couple things that we do need to cover right away here that I want to get out of the way before we do anything else. This was a misprint by me in yesterday's trade idea with the dollar CAD. Fortunately, it didn't come into play, but you can see right here the demand zone I was really looking at is right down there at 134 to 134 and a quarter, and that's that monthly spike low back on the 2nd of September. And as you can see, you got some pretty good stuff right down there. Our entry is just above that demand zone. What essentially that is a swing low. Now, it's not really a yearly low. If you wanted to go back and find 2024's lows, you're going to be down in here somewhere, right around this swing low, late 2023, 2024. And that's a big level, too. I mean, we'll have that outlined as well. But I sort of like the way that this market's slowing way down. We've got that lower Bollinger Band right there. We've got a good shot at maybe taking that bid. Yesterday, I put it in the trade idea on accident, and it went in at 124 instead of 134. So I hope everybody saw that immediately, but I went through, I fixed it, and then I made the updates today. So you're definitely going to want to update that trade idea if, in fact, you're interested in it. Okay, second concept we need to talk about here. Rotation. Now, I got a great comment. We just got it over there in the live chat. Okay, Bab G's goes, let me see, Smart Money did that thing again. And if you're looking at currencies, yeah, it really did. Take a look at what you have here. This is a 30-minute chart here. Yeah, this is Euro FX futures. Now, this is a euro. This is a euro USD essentially. It's just a futures contract. Look at that 30-minute bar. That's what I call your NFP bar. Your NFP bar is a big time zone, and we have traded inside of that NFP bar for more than 24 hours. That is, it's crucial that we understand how currencies work. Typically, they run and they rotate. This right here, I don't want to say that we called it for sure, but we called it. We said, keep a close eye on your NFP range. Keep a close eye on your NFP range. Very, very important. And you can see that 30-minute bar, we have been trading in a phone booth inside of that bar for more than 24 hours now. So to the downside, I'm thinking rotation. I don't think we get a break from this level until tomorrow's CPI report. I think that's absolutely huge. And what you've got here is that you've got a monthly moving average right down there at about 118.66. This is for the March 2026 Euro FX futures contract. Probably none of you are trading futures, but just the pair. But if you want to go ahead and look at that Euro USD, you can see just how similar the price action is. Take a good look at it. I mean, this is one of those things that's absolutely uncanny how this works. Okay, so what do you have? You've got rotation. That is rotation. That's a 30-minute bar. You've traded inside of that for the past 24 hours. Let's back it up to a 5-minute bar. Same damn thing. Same thing. That 5-minute bar on NFP, we've traded inside of it. Look at all those price bars. You can see a couple of observations. The volumes drop way down to nothing, and we sort of find an area of fair value very near 50% of that NFP range, which is right around, what, 118.75-ish, something like that. So that's absolutely key when you're looking at these charts and you're breaking down your currencies and everybody's, man, it's really choppy today. I said, yeah, why? Because nobody wants to do anything. We know NFP was the big catalyst. We've got another big catalyst coming in CPI. That makes life relatively difficult. So if I was going to trade this Euro USD right now, or maybe from now into that Tokyo session, which is about 7 hours, if I want to trade this for the next 7 hours, what do I want to do? If you're going to try to play a breakout or trends, you're probably going to lose. The odds are against you. Let's think of a situation where the odds would be on our side. What would line us up for a beautiful trade? All right, that's a 30-minute chart intraday. What's this line right here? What is that? Well, let's back up and let's have a look. Is it a weekly retracement level? Not really. Is it a monthly retracement level? Yeah. Okay, what do we got cooking? 38% is right there at 118.46. That's fascinating. We're up at 65. Okay. Let's let the gears keep turning. What else do we have? Do we have anything else in there? Maybe let's go down to that daily. What's that daily looking like? Very, very tight. Wow. What's the 13-period EMA? 118.44. Let's dial it in. We've just used multi-time frame analysis to build ourselves a high probability setup for potentially later today. Intraday chart, 30-minute chart. What do we have? Bottom line, what do we have? We've got an NFP bar that we've traded inside of. Okay, that screams rotation. That's range, range, range. What do you got down here? We got that long-term Fibonacci level right around 118.46. We've also got a moving average, a daily 13-period EMA at 118.44. What else do we have? We got 118.50 right there. This zone right in here could be pretty darn good to take a bid, play rotation back up into the guts of this NFP bar. That's a personal trade that I'm looking at for the end of today. I'll be doing it on the Euro FX futures chart, but it essentially is the same thing for you. This kind of mentality and the ability to get in the markets and figure something out is what I want from each and every one of you. Each and every one of you that are going to trade and that have watched these streams. Listen, I've got messages from about 5 or 6 of you this last week where, hey, I just passed my prop challenge, or hey, I've got 2 prop accounts going, or hey, I got some pretty good money in my account that's been coming in, and then I'm hitting my daily targets. I'm starting to feel great. Those are the folks that are showing up every day. They have a strategy. They've applying themselves to the market, and they can think. They understand risk management, and they understand that you cannot trade rotational strategies in a trend. You cannot trade breakouts and trends when the market doesn't move. They understand these things. If you're brand new to the markets and you want to learn one thing, it's not the 9 EMA. It's not a magic strategy. It's learn how to evaluate information and understand what the market's doing. That's it. That's it. And I don't even care. You don't even have to look at fundamentals if you don't want. If you hate fundamentals, just understand that when non-farm payrolls comes out, that moves the US dollar. Understand that when the Fed speaks, that brings volatility. And when CPI comes on the board, that brings volatility. That's it. If you don't want to take your fundamentals any further than that, that's great. But if you understand when that market's going to move and then understand what the difference between a trend and a rotational market is, this is about the best example I've seen in a long time. There's your big NFP bar. You go down, you reject our support, then you bounce back up. Clearly, those are beautiful buys down there. Okay, what are we thinking here? Well, when this was happening, everybody in the world was saying, oh, God, the dollar's trending, trending, trending. And we repeatedly answered the question. I said, no, it's not. It is not trending yet. You're getting fooled by intraday charts. It is not trending. All right. What has it happened since then? Are those folks that thought it was trending back when that NFP dropped said, oh, geez, look at this big move? Do they still believe the market's trending? Well, let's step back and take a look. I mean, theoretically, you could go to the daily. Somebody could look at it like this and say, oh, yeah, that's a nice big run-up, but look at this pullback and this pullback, and now we're coming off. This market is not trending. It is the Euro-US dollar. It is a nightmare. When it trends, get out of the way. 90%, not 90%, I'm going to get quoted on that. 50% of the time, 60, 70% of the time, it is flat and rotational, and that's what we've seen this week. So if you can shift gears between trend trader, rotational trader, you have a great head start, on everybody else in the market, because a lot of people, they trade flat markets like they trade trends, and they get annihilated doing it. They get absolutely annihilated doing it. Let's go ahead and get over to the Great Britain Pound USD. I want to show you this one as well. This is interesting. What you have here is you've got a 30-minute chart. Price is moving a little bit. We had the UK GDP during the overnight. That came in. It wasn't too bad, a little bit better. Well, it wasn't better than expected. It was basically in line with expectations. I didn't see really a tremendous amount of volatility coming in that release. I guess when did you get that? Right about there. You got a little bit of a move. So you've given back all those gains, and you're really going towards making a run at the daily low. So when I'm looking at the Great Britain Pound USD, I'm saying, okay, the dollar's not really strong today. It's about flat. It's at the dollar index of 0.08%. But this Great Britain Pound USD, the pound is losing a bit of puff against the USD. So how would we trade this one? Now, this isn't quite the flat rotational market that we just looked at. Are we still inside of our NFP range? You're darn right we are. Take a look at this. This is important. Important safety tip. Your bank account will be tested on it later. Take a good look at what's happening in this instance. NFP, test of NFP, beautiful rotation. Now we're coming off and we're testing that zone again. So is this a buy or a sell from right here? 136.10. Let's take a look at what else we have. We need some more evidence. Let's back it off to a monthly chart. Is there anything that can help us here? Interesting. January's high. You can see we posted a trade idea earlier today. I'll probably go over that one tomorrow. It's not going to come into play today. Look at that. 135.41. That's 38% rotation. Interesting. That's definitely a bid. It already cashed big this month. How about the weekly? Absolutely. Here's the weekly. Boom. Spike low, spike high. Right at sort of 50%. Look at that, though. 135.40. That's a pretty darn good support zone, long-term support zone. So I'm not sure that we get there, but it's only about 40 pips down, or 60 pips down the way. That could be a very, very good level to be focused on for CPI. So we've got our support zone for tomorrow morning's trade. That's what I'm looking at, 135.40, 135.50. That's the one we really want. Right there, you've got 136. We're trading 136-ish. So the question right now, is it a buy? It's hard. Daily. Let's go down to our daily. Sort of pushing the lows. Is it a buy or a sell? It's probably neither. If you wanted to buy it and play the bottom of that range, that NFP range, I'd say fire your guns. Just don't be afraid to stop yourself out on that and take a short loss. So if this right here was your trade and you wanted to bid right now, I don't hate it. Just understand that we've already tested the bottom of that NFP range once, traded it beautifully. Are we breaking out right now? I doubt it. This time of day, going into the Japanese session, probably would just go ahead and buy the market. That's a really small size. Let's pile some on. Something like this. This bid's not horrible. Where would I stop myself out at? Well, we've got that longer-term Fibonacci down there at 136.03. We basically just bought 136.07s. Let's play this tight. Let's maybe stop ourselves out down there at 135.94. It's not a bad trade because if we do rotate back up into the guts of this, maybe just right up in here, we're going to get paid off at our one-to-one. So I don't really mind that too much. The risk, in my view, is not tremendous. It's right down here. I'm going to put it down beneath that 136 area, maybe give it a little room to breathe right there. But you've got an opportunity potentially to make a little bit of money on just a nice rotational trade going into that Asia session. So we wanted to start with a little Forex trading. Forex is a lot different than a lot of the things we talk about on these streams. Everybody loves the high flyers, and we're going to go look at them. Stocks are all over the place today. Stock indices are active, gold, silver, all those things are moving crazy. But when things slow down, if you know how to trade a dead market, a sideways market, a range-bound market, and you know how to trade trends, you're lethal. You're a lethal trader. It's at that point where you're the complete player. And, you know, in baseball, I always draw on my baseball career. I say, okay, what were the great players? The great players were somebody that made all the plays that they should make and then a few good ones. So what was a great hitter? Well, a great hitter took what the pitcher gave him and then every now and then would hit some home runs when it was available. When you can hit those home runs in the trends and make the big money on the trends, and when the market's flatten out and you're sitting there on a hot August day and the market has nothing's going on and you're still making that 40, 50, 60, 70 ticks, let's say you're making a few $100s a day when there's nothing there, that's when you're a great trader. That's when you're a great trader. To me, I don't even look for things that are moving anymore. I just say, okay, what am I trading? My markets. I got my prime markets. I get there. I know where the opportunities are. I know what I like to trade, and I know how I want to trade them. And that's the difference between somebody that's trying to trade crossovers, 920 crossovers on markets that are dead, and somebody who's trading those range strategies, something real similar to what I just showed you, reversion to the mean when the markets are flat. That's the difference. It's being able to read market state, trade flat strategies for flat markets, and then being able to read trends and piling on the leverage and getting on the right side of those moves, making the big money, surviving when they're flat, making the big money when they're moving. And if you can do that, you can do anything you want. The world's your oyster. I mean, that's no kidding. That's what the greats do. A little psychology lesson too. I hear you guys though. I mean, the markets, when they get choppy, it is really rough. It is really rough. Let's see. Bad day looking for a reversal. Yeah, Juan. I mean, let's go ahead. I'm going to go ahead and get back over to that US 30 because this is really crazy. It's absolutely crazy chart right now, intraday. Let me see. Bob G's, why are the big players randomly switching to bonds? I think there's a lot of reasons. I think a lot of it is you're going to have some serious government shutdown troubles later this spring. I think that you're going to see some uncertainty enter the market from the Epstein files. Commerce Secretary Lutnick was implicated in that. That's going to cost him his job more than likely. They're talking about unredacting some of the names that were already redacted from the 3 million document drop. They say they're some of the biggest names in the world. It will touch the world of finance. Is that one of the reasons why people are getting into bonds? Because maybe some of these CEOs are going to be implicated and it's going to screw up some stock prices, maybe some funds? You betcha. So we're watching that closely. It feels to me like the whole thing's really tenuous right now. So that's a great question, Bab, and you're using your head. And I like that. Why are the big guys going to bonds? A lot of reasons probably. It's probably one we're not thinking of. Nobody's talking about Iran right now. Nobody's even talking about U.S.-Iran. That's the other thing. That's the only reason WTI crude's sort of holding its own above 60 is those fears over Iran. And right now you're off 3% in U.S. oil. Absolutely big move. Big move today. Great trading. Had a few trades. Screwed up one of them, but hit two of them. So it was a profitable day. Let me see. Gordon, I say sell. How do you do ranges in trading view? Yeah, Gordon, I just draw the boxes. So like if I'm looking for a range, I just take that rectangle indicator and just draw a rectangle, or like that NFP range. I'm just drawing that freehand with the rectangle tool. Let me see. Australian dollar USD was moving up well. I thought it was going to hit my take profit soon, and then it suddenly turned. So is gold. The dollar is the reason. I watched it happen in crude oil as well. I thought we had that market based out pretty well. I guess I could show you my charts in a minute, but I thought we had that market based. WTI futures. Well, I'll just show you. So what we've got here, every line means something. Don't get confused, and I'm probably not going to go into what these mean. But basically, the blues are my moving averages from different time frames. Reds are Bollinger midpoints, and then you can see these greens are my proprietary range fixins. So I thought we had a pretty good shot to have this market bottoming out right around 63.37 to 63.18. I figured that was going to be the bottom of WTI crude today, very close. And right in here, Tina, is probably where you started running into trouble with your Aussie trade on gold. This right in here is when the U.S. dollar sort of made a surge. And now it looks like we've got an opportunity potentially to have this bottom today right around 62.50, but it may push lower. I'll be bidding. I'll be a net bidder from 62.25-ish. I'd love to buy 62.25 going into the clubhouse today. I would love that. I just don't know that we get it. That's sort of the big thing. Keep a close eye on this market, though. Oil is going to be crazy, especially going into the weekend with Iran strikes on Iran still on the table. Let me see. Money. Let's see. Eli's got some guns up. All right. Good to see Eli. Let me see. Swissy Japanese yen was like that this morning, but I missed. I wasn't too sure. Great Britain pound Japanese yen. Absolutely. Tito, we'll look at that. We've got a few other questions. Let me see. Bob, I want to learn how to trade those dead markets. Like the Great Britain pound USD and the Euro USD today were hardly moving, and I was wondering, how do I trade such a market? Just basically showed you find those ranges. Like NFP and CPI, we'll have a fresh CPI range tomorrow, but we may trend. And if we trend, then you don't have a range. But what I would be looking to do, moving averages are big for that type of thing. If you wanted to maybe apply an ADR, let's say that you want to define the daily range. That's one of the ways that I do my crude oil ranges is I take this ADR down here, and I just apply what was my ADR reading today. Average daily range was right around 227. So I was looking to figure out, okay, what's my range likely to be? 227. was the total tick count I was looking for, and you can see we far exceeded that. But for those euro trades, those Great Britain pound trades, that ADR can be pretty good, and I would recommend 13 periods on that. But you can use whatever duration you want. Just do some back testing first. That's for sure. But yeah, I mean, it's and another thing you could do, Bob G's, if you want to learn rotation, is you just get in there and you start using your our pendulum strategy, which is in the How to Trade trading room. Go over there and check it out. I built a video on that. Love the pendulum. Pendulum's great for flat markets. All right, everybody, this was the trade that got away, right? This is the trade. This was the one that we wanted. We wanted it so bad. Wanted it so bad. And US 30, right? C'est la vie. I was calling a scalp right in front of 50,000. It didn't work. We cut the Band-Aid off, ripped the Band-Aid off right up in here, right around there, 50,250. 50,250 was the out. Saved yourself some money. We rallied up about another 275 points, and then it's just been an absolute crash. You had a feeling the sellers were going to be there. Go back and watch some of the older streams. You had a feeling the sellers were going to be there eventually from 50,000, and they showed up, and they showed up with a vengeance. I mean, an absolute vengeance. So now US 30's crashing down. Where would be a pretty good bid? Right down there, 49,343, 49,350. Pretty good area. Do we get it today? You might get it today. It is possible. This market is getting shellacked off about 1.25%. Now, normally I would look at a 1.25% and say it's not that big of a deal. This one's different. And the reason why it's different is because the sellers have stepped in and they have defended 50,000. And what happens is the more those sellers, the further this price goes, the more sellers start feeling comfortable about putting their back against 50,000 and thinking you're going to get a big time retracement. So I would be looking at 49,350, somewhere down in there, 49.5 maybe, as being a potential bid. You've also got that daily Bollinger midpoint down there at about 49.4. 49.5 could be big. Could be big. We'll be watching that one closely as well. 78%, 49,000, probably a good bid as well. Still bullish here stocks, but this is the trade that I really wanted. I really wanted it. Frustrated, man. This is one where you just ring the cash register and go start looking at new cars and things. But this right up in here, this area, the entire world can see it. And if there are a lot of stop losses located right above that swing high. Now, the smart money traders are going to call that a liquidity sweep, and they'll say, oh, yeah, and then the institution stepped in, whatever you want to say. The bottom line is this. The price, the momentum, ended right here. We knew 50,000 was the catalyst. 1, 2, 3, 4, 5 straight days we've traded 50,000. I don't know that we trade it again tomorrow, but this is interesting. The whole world's looking at that top. There's a lot. I bet you anything. There's a lot of banks that are dug in, shorting this big, thinking that, okay, we got the top of this, and we're going to ride this big correction down, maybe to like 45,000 or something. Interesting. Very, very interesting what happened here. Very interesting. Unfortunately, it shook us out, shook our scalp out. Probably could have put another trade on right here saying sell, sell, sell beneath one of these lows, these daily lows. Didn't do it, though. Didn't do it. Hesitated, I guess. A little gun shy. Honestly, I was like, maybe. Let me see. The UK futures trader. Good evening. Good evening, UK. Good to see you. I know a few UK futures traders. That's for sure. All right, we got some requests in here. Let me see. Swiss yen and Great Britain pound yen. All right, let's look at the yen. Absolutely. Start with the Swiss yen. A true safe haven pair. A lot of folks really believe the yen is an incredible safe haven because of its diversification tools. Okay, this is interesting to me right away. I don't typically look at this pair, but it's a good one. It's a good one. Plenty of volatility there to make some money. Nice big pullback on the daily. So the first thing that we could do right off the bat is go spike high, spike low. Right there, 199.93. Love it as a sell. Love it. The question is do you get it? Probably not. Probably not. Well, we already got it. Never mind. 30-minute chart right there. There was your pullback, failed. So now you're really looking for a deeper pullback just because it's so bearish in there. Let's go to like a monthly. I'm always curious. Anytime I see big moves, the first thing I'm doing is I'm going to my weeklies and my monthlies. So my monthly chart isn't going to be much help. Our Fibonacci would have to start back there, essentially in 2025's lows. We got to wait longer to see a bigger pullback because our Fibonacci's are going to be right down in there. which are probably quite a ways away. So let's go to a weekly. See what's been happening on the weekly. All right, now this is more interesting to me. Okay, big horrible week, I guess. If you're long this pair, I am sorry. But 2.5% loss, that is not good, especially for a cross pair like this. You could be looking right down here to that value area, maybe run a Fibonacci. 78% was absolutely perfect. If you wanted to go current spike to spike, you could see 78% was still pretty good. What could we be looking at, though, as far as a trading strategy? Well, I mean, this is it, guys. I mean, I am not a smart money trader, but I understand some of the concepts, and a couple of them make sense. Rally, base, rally. So yesterday we did what? Drop, rally, drop. And today we're doing rally, base, rally. We actually made a video on that over at the How to Trade channel, YouTube channel. Check that out if you want. So essentially, sort of to use I just call it my range tool, but you've got a rectangle right there. What is that? That's your order. That's your rally, base, rally. So one more time to review. Rally, and you can start this wherever you want, but it's going to start right there in earnest. Rally, base, rally. Now the pullback, you're coming back to check that base area out, which theoretically should be downside support. Now, will it act that way? I don't necessarily know, but I do know that area right there is going to catch some bidders. As a matter of fact, it already has. So I've also got my 13-week EMA there, which I really love, 197 flat. That could be a pretty good trade if you're interested in bidding downside support. But a lot of people are going to be interested in this zone. So one last time, I mean, this area right in there, it's going to be sort of the line in the sand. If we see price really take that out and maybe trade beneath my moving average there on the weekly, then you're in for a change in the seasons for this pair. But one last thing that I would point out, I mean, there it is, last April, after the tariff crash, the tariff panic. Holy cow. I mean, that's when the game started. And it hasn't ended yet. So that's a major repricing of a safe haven pair. So I hope that helps a little bit. If you're looking for sort of, I won't call it a junk food trade, but if you're looking for maybe a way to trade right this minute, dial that down to a 4-hour chart. A couple of things I'll show you. The move isn't that uniform really, but something like that was perfect. You can see that went right there. Let's do it again. Spike, maybe something like this. Do you want to do that? Probably not even current enough. Let's try something like this. Flat. I can't stand these Fibonacci numbers when the market's flat. Not interested in them at all. 98.90, 198.90. You got a chance there, maybe to sell. I don't love it though. There's a lot of volatility in this thing though. So definitely a pretty good pair to be trading. So you're not wrong by trading that one. Let's see what else do we have? Great Britain pound, Japanese yen. You guys want to look at the guppy? Let's have a look. All right. Well, we had a pretty good area we were attacking here. Let's go ahead and step back off of it and see exactly what our support level was all about. That's a big time zone. It's not a monthly, it's a weekly. And I know I'm going fast. We got a lot of markets to look at. We still haven't covered gold and silver. We have to do that every day, don't we? All right, so there it is. So you're 38% right around 208. 208.93 was a big deal. This zone right in here, that's a big deal, and it's gone now. It's gone. So the idea is always what once was support is now resistance. You could maybe even step up and sell from up there if you do get a retrace. But let's take this down to a daily chart. Fascinating. You didn't get much of a bounce off of this at all. I mean, you got a little one. What was your high? 209.55, and the level was 208. So only about 50 pips. That ain't real good. Spike high, spike low. Pull back 210.21-ish. Maybe if you wanted it, you could even step up and sell right there at 208, 208.92, and just stop yourself out over 209 if you wanted to try to get a trade. To me, that would be it's a little bit of a challenge to get this sell right now. I think it could already be gone. As far as what can we do moving forward, I always like to be not proactive as opposed to reactive, but something like this. This isn't bad. I like the way this market structure is. Spike low back on on November, early November, week of the 3rd of November. Man, saying this stuff's just a chore some days. That right there, there's your high, there's your pullback. So 205, of course. We're doing business at 205. We have to. right there. There's your retracement, 205.16, maybe 205.25 would be a pretty good area to bid. As far as what can you do right now, you want to sell. You probably want to be short, if anything. But from this level right here, I'm not interested. I also am not a 50% trader, but right in there, maybe a pullback and a sell opportunity from 208.93 might get you involved in this market. That's for sure. All right, let's have a look. The UK futures trader, I think you had something to do with Lockwood. He's where I started here 6 years ago. I blame him for a few years of misery before things clicked. Yeah, Andrew was he was in this trading room or on this platform right when I first started. So that would have been 2021, I think. 2021, something like that. But yeah, we worked together for, I don't know, 6 months, 9 months, something like that. But yeah, that's getting in the way back machine. Yeah, UK futures trader. Absolutely. I trade futures too, so we have that in common. Yes, sir. A quick look at the dollar yen ahead of CPI. And let me see, Tina Jin, can you still buy a retracement of the Swiss yen, please? Yeah, let's go back to that Swiss yen. Everybody's trading the yen. I love it. Let's go back to that. Can we buy? Can you still buy a retracement? Yeah, you could. So if I was going to buy this thing, a couple of things that I would have. I mean, we just went over that rally-based rally, so something right in the guts of this rally, or that base, excuse me. The idea behind these things, this rally-based rally concept, is really easy. You're just looking for a rally and then an area where it bases and then another rally. And this area, theoretically, is going to be your downside support. Now, what I like about that area, and I'm not a rally-based rally trader at all, really, but I'm not, silly. I understand the concept. That right there is interesting to me. Okay, so if this zone is going to be where we're thinking downside support, or maybe the bidders are going to be, maybe it's a demand zone, a lot of people call it. How about your my own personal favorite, the 13-period EMA is right there at 197. So if I have a chance to buy my EMA down there right around maybe 197 even, you could probably get away with buying 197.25. So you're buying the heart of that rally, that base area, rally-base rally. You're buying the heart of that base, and then you're also buying a moving average, which I really favor was the 13-period EMA. You can't argue with it. I mean, I've been doing so – I've been trading the 13 EMA for so long. I mean, this is a weekly chart, and honestly, Tina, take a look at it. I mean, you broke out over it, you pulled back right in there, you hit it. Maybe right there you hit it again. We haven't traded beneath that zone in such a long time that to get a shot at buying that base area right around that EMA location, which is right around 197.04. So maybe pad that a little bit and go at 197.25. That would be what I would call high probability entry. Now, how would you manage it? Well, that's the next question, and that's the question we get from traders all over the world. How do I manage my trades? And I go, I don't know. You have to manage them the way you have to manage them. I mean, I can show you my trades for today. I mean, this right here, I had my knife catching gloves on. I went against this trend, but I did it in a disciplined fashion. I did it realistically. I'll show you the 1 minute. I knew exactly what I wanted out of each trade, and I wasn't going to let these things get away from me. So each one of these lines is potentially an entry point. This one right here was beautiful. 1 minute chart went down. I held it, took my money out right there. Beautiful trade, loved it. The next one, this one right here, I missed this entry. So I was like, what do I do? What do I do? Ended up pulling it. That's okay. I'm not worried about it. That went up, got its money. And by pulling it, I did the right thing because eventually that thing did break and we went way down. Then I stepped up on this one. I nailed this trade location as well. Beautiful bounce. I only wanted 8 ticks. I ended up getting 5s on it. So right there, I've already made my money for the day. Probably the best thing I did was pull this order. Now, is that the way that you're going to manage your trades? No. I'm talking about high impact tick scalping, where it's a very serious business. It was a frenetic business. It makes you angry inside some days because it's such a fine thing. That's how I was managing my game plan. I said, listen, this thing's in an absolute trend against me. If I'm going to trade and I'm going to survive, I've got to get in and get out. Take what they're going to give me and then get out of the way because I don't know how low it's going. That's how I had to manage that. I don't recommend anybody else doing that. Now, you may be in a situation where with your strategy you said, I don't know, Shane, I sort of felt like crude was going to go down. I just sold it and walked away. Well, you made a lot more money than I did. My point is this. Either answer's right. Either way to do it's right. I mean, I have no problem with what I did today. There was one thing I could have done a little bit better, but that's okay. We'll be back tomorrow, and there's going to be more tomorrow. Got paid today. Can't beat that. Counter trend trading makes me old fast, but it's not wrong. And as long as whatever you're doing has structure and makes sense and you have the discipline to follow your strategy that you know works, that you've proven over time works, or that you know from your back testing data works, or that you believe in, then you got a real shot with your trade management. That's what it's all about. That's what it's all about. As long as you're hitting your markers and doing what you need to do every day, then you got a chance. If you don't, then you don't have a chance. All right, let's go ahead and preview CPI, and then I'll cover the Japanese yen, and then we'll go ahead and just take off. So week 6, 2026, this was a big one. T-bill auctions, nothing on Monday. Tuesday, retail sales, big number, really. Wednesday, U.S. non-farm payrolls came in a huge number, huge topside surprise. And then Thursday, UK GDP came in line with sales. Home sales was an absolute crash, and this is sort of interesting to me. This was realtors report a new housing crisis as January home sales tank 8%. That's one of the reasons why you see the selling today. It has to do with these. Everybody's really, really worried about the home market. When the market crashes, when real estate crashes, typically life gets very difficult across all markets. That's what we saw in 2008. Are we going to see it again? Maybe, maybe not. I don't think so, but maybe. Who knows? The financing will be, we'll talk more about this later, but the financing is going to be everything with real estate. But it does suggest that, yes, there is trouble in paradise when you see a real estate crash. Now, I don't think it's a crash yet. I think that's nonsense. That article was written from people that have never seen a crash. I've seen a real one, and we're not there yet, not even close. In any case, tomorrow is going to be U.S. CPI, and that's a big deal. Let's hit a few of the news items of today. Existing home sales, that was the big deal. I just told you 3.91 million, 8.4% negative. That's horrible, but it is for January. Seasonally adjusted. Remember, January, typically not the buying season here in the United States. You see that come online in May and June, maybe even July, something like that. But definitely be looking for this trend, maybe to continue, maybe not. Initial jobless claims 227,000. Not really much of a market mover at all. Not even really worth talking about. News of the day was existing home sales 8.4% from the previous month to an annualized rate of 3.91 million. Way below market expectations after having reached a 3-year high in the last month of 2025. So it's just a pullback. That's all I would say. I don't think it's the end of the world, but you can see that chart right there does not look good. I mean, holy cow, you went from that to that. That is not a good situation. Not at all. Tomorrow, CPI. Now remember, it all fits together. The housing market is basically predicated upon cheap money, financing. If interest rates creep up, or if they're too high for too long, you do get a pullback in the home sales because people don't really want to make the payments. They don't want to pay that big tab in order to get their house. They just don't. So, and by big tab, I mean those high interest payments, those high monthly payments. What we're talking about now is going to be the other side of that equation, the inflation. Now, remember, there's two things that the Fed has to take into account when they craft their monetary policy. Number one is inflation, pricing stability, and number two is jobs, labor stability. Well, you had the big jobs number, right? So the jobs came in way above expectations yesterday. We had it for you live, and that was a big deal to a lot of people. They said, well, maybe we don't need rate cuts. Well, tomorrow's the other end of that equation. Tomorrow's the other part of that monetary policy decision. It's inflation. Is pricing stability returned? Has it returned? Well, here's what we're looking for. U.S. Consumer Price Index, we're looking at 0.3% month over month, so we're not expecting it to tick higher from previous levels or accelerate. Year over year on a yearly basis, we're looking for this thing to go down to 2.5% from 2.7. Now, core, we're looking for the core numbers. Food and energy are stripped out. A lot of people love core. I don't. That's expected to tick higher at 0.3% rather than 0.2. And the idea is that you won't get the benefit from those lower energy prices. I don't know if that's going to be the case. We'll see, though. And then on a yearly basis, the Consumer Price Index core is going to be 2.5 down from 2.6. So all in all, we're expecting a decent number. We're expecting CPI to be relatively tame with what we've seen over the past couple of years. Now, here's the thing. This is the trend. Now, this is the raw CPI data. This is the raw data. This is what the index data is. It's not growth. Those numbers I just showed you are growth. A lot of people live and die with growth. They love growth. Oh, everything's all about growth, growth, growth. Well, I'm sort of old. I'm an old school guy, and I take a look at some of these charts from time to time because I want to know the raw data. Clearly, CPI is growing. Inflation always grows to some degree. That means that your currency does lose value over time. It's just the way that it is. So, look what's happened in the past several months. Now, that right there is a 5-year chart. That goes back to 2021, coming out of that COVID era when there was no inflation because the world was closed down. And since then, when all that free money and 0% loans and all that stuff decided that it was going to get absorbed by the economy, what do you have? You got a 45-degree angle that's taking you up to some seriously new heights. Now, the last 2 months, we haven't extended that trajectory. That is a big deal. That is a big, big deal. If we come in with a little bit lower CPI again this month and we actually start to get that plateau in the index data, that is going to be extremely, extremely hawkish for the U.S. dollar, or excuse me, extremely dovish. So what that's going to mean, it's going to be a little bit hawkish for the Fed, but it's going to be dovish for in any case. Here's what's going to happen. If it plateaus, and you don't see inflation rise as much as maybe it has in the past, or maybe it comes down a little bit, then we're in an interesting position because you've got jobs up and inflation's down. Where's the impetus to cut interest rates? It doesn't exist. The Fed has a two-pronged mandate, 2 jobs, all right? It's got to manage pricing stability and maximum employment. Jobs came in at 135,000, shattered expectations. So that employment situation feels pretty good. Your inflation situation, if CPI comes down a little bit like we expect, then that inflation's coming down. Now, theoretically, if the inflation's coming down, it has room for some rate cuts there. However, is there any reason to cut rates if the jobs are still going up? In my view, these numbers are sort of sealing the fate for no rate cuts until June. And it's hard to think about dovish and hawkish and all the different. I get it. I get confused. I just got confused. But the bottom line is this. When the jobs numbers go down, you have to cut interest rates to spike economic growth and put people back to work. When prices go way up, you have to raise interest rates to cut those to bring pricing stability back. And when things are sort of looking like they're going okay on both ends, jobs are up, prices are down, you don't do anything. You don't do anything. And I think that's exactly what you're going to see with your rates. And by that idea of holding them longer may bring a little bit of strength to the U.S. dollar. But we all have a pretty good idea what's going to happen with the next Fed chairman. There's going to be a real rush to cut interest rates this summer. And that's going to be interesting, to say the least. I think we're in for some just fantastic trading. We've already got great trading, but this year is going to be one for the books. Believe me, this is going to be a good one. All right, I got one more. Let's see. Yeah, let's leave that. Where is WTI trading right now? Yeah, we're not going to get a shot at that 62.25 today, but that's all right. Let me see. I wanted to look at the dollar yen, and then I had a question over there in the live chat over on YouTube, and then we'll go ahead and call it a day. All right, so let's go over the dollar yen, and then I'll go ahead and answer your question there. Super. This is interesting, right? Does anybody remember this? Sort of had a couple to handle up here, probably on a different time frame. Let's get rid of this. What do you got there? More than likely what? Got a weekly trend line. This was a long time ago we did this. A month ago. 1 touch, 2 touch, 3rd touch, break. Well, actually, that's the 3rd touch, and then we finally broke. Once we broke that trend line, that weekly trend line, we had our trade sort of set up to the short. It's doing very well, right? So what do we do now? Well, dollar yen, clearly we're coming off. As far as bidding this, we step back to a longer time frame. The monthly should give us a great opportunity to bid. And I mean, there's your moving average. 13-month EMA is right there at 151.76. That's a beautiful trade. And then this spike low, right from that spike low to this spike high. And look what you have. I mean, this is like unwrapping a Christmas present. Look at what you have there. I love my moving average. A couple of things that you need to be aware of if you're trading this pair. Last month's low, 152.09. Be careful for a washout underneath 152 on tomorrow's CPI news. Remember, it doesn't matter what happens with CPI. You're just going to get a flood of volatility into the market, and then it's going to digest it, just like that NFP that we showed you earlier today. That's how this will work. Now, if you do bounce off of that moving average, then you got an opportunity potentially to make some money at the top side. But what do we really like? What do we want to sink our teeth into? Clearly, the game has changed for the yen. I'd be looking to buy pullbacks, but they wouldn't be trying to pick bottoms. It would be more along the lines of trying to get good trade location for a short-term trade, short-term long. 150.84, maybe 151 even. Not a bad level at all. Not a bad level at all. I mean, you could get in there and make that trade and feel pretty good about it even on CPI day. This will probably be one of the ones that we'll look at a bit before tomorrow's live stream at CPI Live. Interesting stuff, though. I really like the market dynamic and the way this is shaking out. We've got trades all over the place. I didn't even get to gold and silver today, and we've been going for about an hour. I'm going to go ahead. I'm going to save them for tomorrow. If you have any questions at all, though, be sure to ask. Just send me a private message, and I'll get back to you later today. I sort of have a full slate today this afternoon, but I'll get back to you as soon as I can. You know what? We're here. Let's just do it real fast. Silver, unbelievable. Coming off again, off about 10%. Just the huge volatility. You can see these levels right here. We sort of hit 85 and came back down. I wanted to sell right up there at 100. The real question is what can we do, to make any money here? You want to buy dips, I do, but you got to get a good dip to buy. Look at that. Look at that right there. Spike low, spike high, all-time highs. Pullback bounced off of 64 beautifully. All right, so that area down there is probably another bid. Do I want to be bidding 75s? I think it's really risky right now. Really, really risky. Is it possible, though? I mean, there it is. All day long. All day long, 75 has been money in the bank. Do you just keep doing it? Maybe. I probably wouldn't. This right here is incredibly bearish, at least on an intraday basis. Look at the move. Boom, boom. Compression. That's your textbook L formation, which is extremely bearish. There's your L. You guys know what time it is if you break 75. Look out below. There goes the mountain climber, right? Falling off the cliff. Be careful. If you want to take those trades, it's a lot like what I was talking about, catching the knife, going up against that trend day in crude oil and actually walking out to tell the tale profitably. If you're going to do that, that's fine. You got to cut them off fast, and you don't let something like that get away from you if it breaks beneath 75. Be careful. Caution's the better part of valor. Gold. Interesting. Got the big move right there. Spike high, spike low. You're sort of fighting right now. Fighting with this key area, 49.977. 49.75-ish, 49.77. Interesting. This 38%, 49.54. Very, very difficult to just not scalp those all day long. How about right up here? These things aren't accidents. We've got 5,000 mark. Look at our 62% level right there. Boom. Pullback, probably pullback sell scalps. Yeah, more than likely. If you could get it soon, that would be great. Are you going to get it today? Probably not. Could you get it tomorrow? Yeah, could get it tomorrow. 5,000, we thought that was the greatest support zone of all time. It was right there. Great example. I mean, look, we're learning all sorts of stuff today. 5,000 sort of bottomed out and came back. Oh, no. Party's over, right? Let's break it down. Let's take a look at exactly what happened. I want to know exactly what happened to 5,000. Let's go right here. Let's go 10-second time frame. What happened right at 5,000 earlier today? Ten-second time frame. You got no love at 5,000. Bidders were slaughtered. Right there, boom. Look at that. Big time plunge down to 49.92 in 10 seconds. That is really an incredible situation. If you're bidding that, you could have bid 5,000. I wouldn't have said anything. You could have taken that trade. It probably was one that was on a lot of people's radar. And it wasn't necessarily wrong. What's wrong is not being gone. You got to cut these things off at some point. You can't just keep dollar cost averaging in, hoping the price comes back. I mean, take a look at how bad this really got. It got bad. It got really bad. So that is the number one rule. If you're going to go against something that's happening that fast and it's that hot, you got to stop yourself out sooner rather than later. And if you find yourself in a position where you're like, okay, I got to cut this trade off, maybe you shouldn't be taking it. If it's that scary, maybe you shouldn't be taking it in the first place. Something to think about there. If you're interested. That's a monthly for gold. That's crazy, isn't it? Look at that. Unbelievable. What do we really want to do with gold? In our heart of hearts, we want to buy it. Can you buy it from right here? I don't think so. I think you got to wait for a big, deep pullback to empty the piggy bank, back up the Brinks truck. Clearly, we're in a bullish uptrend on the monthly. No question about it. 44 down there. That's beautiful bids. We're doing that all day. You got that earlier this month. You got it last week. Since then, it's just been an explosion of the top side. So from here, do we want to buy or sell? I don't want to do either. I want to wait. Listen, look at this weekly chart. This is really hard. We know we've got value down there. We know we've got probably pretty good sells right in front of that all-time high. We could probably scalp that and be all right. But right now, I mean, the game is just set up to be 5,000. And you guys saw exactly how ugly that intraday price action was. That was really challenging. If you got wiped out by that, just chalk it up as a lesson learned. And that's why you got to have stop losses. You got to pull the plug on some of these trades that just don't go your way. You have to. If you don't, you could really run into trouble and lose a lot of money really fast. Man, there's a lot of markets, a lot of things to know today. Today was not easy. Let's get back on over. Check on our 9 EMA. We had a whole bunch of signals here. Let's go with this one right here. What was this, a Bitcoin? Bitcoin, yeah, you got scratched out right there before the big rally. That's why 1-minute charts are tough. 5-minute chart, how about that? It didn't work that well either. So we're sort of caught going against these trends. Gold. Didn't really have much. Right there is what you wanted, right in that zone. And always remember, there's a couple troubleshooting tips that I put in the videos to make sure that your strategy's firing. That should have been a bid right there. But a lot of times what'll happen is we'll switch around, jump around all these different charts, and you just got to reload the chart, and it'll show you your signal. So if you're watching it in real time, you're probably in pretty good shape. But a lot of times when you switch around a lot of time frames and different charts, it can be a little problematic. And I cover all that in the troubleshooting videos in different ways that you can make sure that this thing's up and running for you the way that you need it. Interesting, Euro USD, that was a pretty good bid right there. Fantastic, really a good look at a market that has just been flat for so long. And now maybe we're starting to rotate up towards the top of that NFP range. Who knows? All right, everybody. Thanks for all the input today. We had one question there. Super says, how do I trade the news? I mean, how to gather data to know news biases. I would recommend not trying to guess which way the news is going to drive a market. I think that's impossible. Eventually, those fundamentals, everything I just covered with monetary policy and things, those will play out in those trends, but they happen over time. They don't just happen on an intraday basis. What you need to know about the news is that it spikes volatility. That's big. As long as you know that, you can stay out of the way, and then maybe if you have some technicals, you can capitalize on it. But as far as let's say tomorrow, if CPI comes in above expectations, well, that theoretically is going to drive the dollar higher. Now, will it do it tomorrow? Probably not. It's probably going to be a choppy mess tomorrow. But if we know that, hey, okay, CPI came in hot, then maybe we're going to hold rates where they're at or maybe even end up raising them, then that's going to drive the dollar higher because, well, we weren't expecting that. So you can certainly, learn how to read all those economic factors and really build yourself some strong hypotheses to trade fundamentally. I love it, but you've got to give yourself some time. I mean, those are swing trades. Those are short-term investments. Tomorrow, it doesn't really matter what CPI says. The market's going to do what the orders tell it to do. And when you get a bunch of orders hit the market at once, then the momentum algos kick on and the price action's all over the place. It just is chaos. It's absolutely chaos. All right, let me see you. Tina Jing, I got in at gold at 49.33 as you told us the Fibonacci retracement last time. 49.33, so you're in the money. Ahead of CPI. I cannot tell anybody how to manage a trade, and I can't tell you what to do. I'm not a financial advisor. However, if I was long from 49.33 right now, and you're at what, 49.35-ish, so you've got some money put away, I would either hold this and flatten out maybe right after the right after the Japanese Open. Might give it a little bit more room to trade up from here through the Japanese Open, but I would make sure that I was flat probably going into the London Open and into US CPI tomorrow. As far as a take profit, 50.88, I don't know that. I just don't know that. Aaron, good to see you. Aaron OFX. All right, guys, I'm going to go ahead and sign off. We've gone on for an hour. A lot to cover today. It was a good session. ER Dumbo, yo, what's happening, yo? Pretty good week. All in all, I might show my P&L tomorrow for this week. It's not anything to write home about, but it's all right. It's consistent. That's really what I'm looking for, consistency. I don't like the big highs and the big lows. They make trading too tough psychologically. You want to be as even keel as you can. Keep your feet on the ground. It's easy to get swept up in big wins and get destroyed by big losses. What's hard is maybe hitting your target early in the day and then putting your dom away and going and doing something else. That's hard for us because we're traders. We trade. It's all right. All right, guys. I'm going to go ahead and sign off for right now. I'll be back tomorrow on your CPI Live. We're going to have looks like gold's making another leg down right now. I mean, that's a rough market today. We're going to be back CPI Live at least 10 minutes ahead of the release. So I'll be up bright and early, ready to go. We'll have some trade ideas. We'll probably trade this 9 EMA a little bit. We are promoting that strategy right now. Remember, free EA, free PDF, all sorts of instructional videos there, how to get it loaded up, and then also how to trade it. It's the 9 EMA strategy pack. So head on over to that page. I listed both live chats in the How to Trade Trading Room and on our YouTube live chats. Head on over, get registered, check it out, see if you like it. There's some very, very key things that you need to understand to trade that thing profitably, but it can be done. It produces a lot of winning trades, but there's also losers, especially when you're fighting trends. So you've got to be smart. You got to be smart about what you're doing, that's for sure. All right, everybody, I'm going to go ahead and sign off for now. That's plenty from me. You have a fantastic trading session. Trade the action well, and we'll see you tomorrow at CPI Live.